Okay, gold and silver have just rose up. Gold, gold rose almost over about 4,500, and very soon we'll be seeing a 5K pricing for gold. Well, as for silver, it almost went up, actually overperforming gold because gold went up by 70% more. To understand what that means, silver went up by 140%. That's almost double of gold, and silver has been the slowest silver actually. And this has been its best year of 2025. I would call it a fiscal year. We should try to understand that whenever you see such commodities going high, it doesn't mean that the economy is performing well. It indicates factors of inflation and the money printing that's likely to be taking place. Because as I speak of right now, well, the Fed actually, before we have been having quantitative tightening, because the high money printing that the US government has been doing all over and over, it has been trying to do what they call quantitative tightening so that it lowers inflation. However, it found itself when the economy is almost breaking up. If you're holding gold, if you're holding silver right now, I would highly recommend you to sell it right now, because trust me, you're likely to have a double price by the end of 2026. If you're holding such commodities, I would highly recommend you to have the best patience actually. It's better than someone who's holding cryptocurrency. I do own a few cryptocurrencies, but I highly recommend anyone who's holding such commodities like gold and silver. I would highly recommend to hold them for longer, because the payoff looks much more better. This is not actually financial advice one or the other, but this is just a recommendation. I'm just recommending, but it's not financial advice actually. If you're watching this video, this is not financial advice, it's just education. Just to understand, we are just trying to understand why gold and silver is still heading high, and why such prices are still sending one or the other, than like they are converging to be heading high and high. As we speak right now, silver is doing great, one or the other. Silver is doing great and gold is doing great. But what does that indicate for the rest of the economy? To understand why these commodities are going high, I will try to indicate in one or two ways. But let's look at the US performance of this year, okay? The US government, how the government has collected money and how has it spent it. Well, the US government collected around 5.23 trillion US dollars, and it funds itself spending almost seven, not almost, it spent 7.01 trillion US dollars. Well, the money it collected and the money it spent, it actually spent more than it collected. In one or the other, it funded itself in a physical debt of almost 1.78 trillion US dollars. To understand what's taking place, that has been happening for years, and that doesn't make gold to be going that high. And everybody be like, yeah, that's strong for the US government to do that. Well, regardless, we try to understand whenever the US government overspends, it's borrowing that money in one or the other. And on additional cost on that, we should try to understand there's what they call money printing. For those who don't understand money printing, well, there's fiscal money getting injected into the economy. One of the main issues why we are facing such calibers of kind of economy today, because we lack productivity. Whenever the lack of productivity, there's free money that's getting injected in the economy. We no longer have that the 1990s depression of the kind of economy that we had before. Today we have such a kind of economy where bad businesses still exist because they have a savior like the Feds. They have the savior like the Powell, Jeremy Powell, the chairman of the Feds. They will be here to safeguard like banks from the Silicon Valley banks. But you should try to understand that one of the few reasons you should try to understand that why gold and silver are going high. I'm going to give you an example of the stock market. The stock market is doing all-time high. Gold and silver all-time high. Signs of the bubble always are being shown by the size of the commodities. Whenever commodities go high, that means there's lack of trust in the what we'll be calling the fiat currency. Whenever there's lack of trust in the fiat currency, that means investors or anyone carrying any currency, they're going to be running for commodities like silver, gold. Gold has been actually performing way better and better. It just been overperformed by silver because silver is just getting the hype actually. That's why we just saw 140% boost in the silver this year. We should try to understand why don't we expect such prices to fall down anytime. I'll try to keep your eyes on the trade war between the US and China. That's not just a war. That's actually I would be calling the silver line, because these two countries actually dominate the global economy in one or the other. They dominate productivity, they dominate military, they dominate tech, they dominate everything. However, we should try to understand that China of today is not the China of the last 30 years. The China of today almost dominates all the rare earth materials that we are seeing today. Seeing silver and gold being fought for. We have the presence of the BRICS. These are countries that have been piling gold, and especially gold actually. They have been piling gold all over and over. We should try to understand China alone is also piling silver. Because these are materials that are needed to in electronics, building tech, building chips. You need silver, you need such kind of materials. A few factors to understand why gold is going high. One of the main factors, we should try to understand why people are losing trust in fiat currency, especially the US dollar. Why are they dumping treasuries? I'm going to give you an example of one way or the other. We should try to understand the US debt. Today it's over 38 trillion US dollars. Very soon it will be turning 39 trillion US dollars. For those who don't understand how big that is, we may say, well, Trump implemented the tariffs. Tariffs collected almost, I would say, that's almost 195 billion US dollars, not even 200 billion US dollars. We just have to round it off to say 200 billion US dollars, but not even a trillion, at least to clear a trillion. The US alone is just servicing the interest rates with almost a trillion US dollar. As of today, so 170 billion US dollars. That's getting that's the cost of interest, not the debt actually. All numbers indicate that the government is not likely to be stopping. It's not likely to be reversing its spending. It's not likely to be stopping. We should try to. I'm going to give you an example of the Dodge. Well, the Dodge was presented to us in February. Well, by the end of November, it was highly blocked, and it was highly dumped one or the other. The growing unemployment, the lack of this. All these are all indicators of lack of productivity. The growing unemployment that you're seeing today, they're almost at 4.6%. By September, it was at 4.5%, 4.3%. As I speak of right now, it's at 4.6. I'm gonna give you one bigger example. I'm gonna give you the biggest holder of the US debt, and that's Japan. Well, Japan feels like it's done borrowing free money. What we know has the Japanese what we know has the yen current trade. I feel like we are looking close at the end of the yen trade, one or the other, because it means one or two things. It means that we are ending what's known as free money, because investors have been borrowing the yen, well, injecting money into US stocks, everything. And we are speaking of the biggest holder of the US treasuries. That's one economy that can break another economy within days, within actually hours. One of the main reasons why I'm saying Japan is likely to break the US economy is start raising interest rates, because it rose interest rates from 0.25% to 0.75%, which is still low to the rest of the economy. But we try to understand that this currency, you should try to understand the structure of Japan alone. The structure of Japan alone was designed as I would say like the best cash flow, like to inject money to the rest of the economy, indirect or directly, because it has been just like straight borrowing free money in one or the other. Whenever you see the biggest borrower trying to increase interest rates in one or the other, he's finding backlash. This account having almost 250% of its debt. It's having reserves of almost I would say 2 trillion US dollars in reserves, and having a debt of 10 trillion US dollars. There was that might be big, but it's I would say it's a global currency for the US, but for the Japanese yen, it's the opposite. And for those who don't understand how this big is, it's really big at one or the other. If you're expecting to see silver and gold going back down, I would say you need to think big actually. You need to think big, because seeing such commodities going up and up, it doesn't indicate any kind of slowdown. Because what you try to understand that politicians are here to spend. They are here to inject money. You know, the big and beautiful deal. It doesn't matter whether they are Republicans or Democrats or independent, anyone in power. Because whenever they try to look into such criteria, let's say solving the US debt in one or the other, they are gonna lose what they would call like popularity within the citizens, one or the other. Because solving the US debt means one or two things. This is why I tell you we're not going to be seeing back normal prices of gold and silver. One, have the president of the BRICS, okay? The BRICS are piling up gold and silver, and they're trying their level best to ignore the use of the dollar for the yen upward, or for normal currencies, or for their normal currencies. They are jumping costs, and that's one of the biggest breakers of the US economy. We are heading for a structure that's irrelevant one way or the other. We are heading for a structure that's likely to be, I'll be allocating as something that's, we are unaware where the economy is headed to. We are unaware where fiat currency is unpredictable, because we are heading to a level where the reserve currency is lacking trust for the global economy. We are heading to where the reserve currency is no longer highly needed to the rest of the economy. We are heading to a level. That's why today you're seeing silver and gold are heading high. One of the main reasons why you should try to understand that the dollar is losing dominance. The dollar is losing trust. The dollar is losing and this all came, whether I would say, one or two ways. Ever since we started actually also seeing that the frozening of the Russian assets in Europe and in the US, that indicated a lot of things. That's also spiked up things like dumping the US treasuries. I'm not saying they dumped them all at once. However, they've been dumping them one or the other. Whenever you see, I'm gonna give you a few examples of a few the biggest investor that you know. If you look at investors like Warren Buffett, and these are the biggest investors of all time. This guy is sitting over around 300 billion US dollars, whatever. That kind of amount of money in one or the other in cash. He's not putting it in stocks. He's not putting it in cash. It's just holding cash. Regardless how inflation will be heading high, I mean, that's a lot of money, but it's still on its level best. If you look at the stock market today, it's almost 222% higher than anything you would expect. Don't you feel like something's off whenever you see commodities like gold, silver, stocks are all doing great, but you as a person, you're broke as hell? Your cost of living just running out of time. See, actually, before anything takes place, most cases look at the movement that gold does, because whenever gold goes high, everything turns around. The table's done. If you're expecting to buy gold when the dip comes, well, you could see that at any time in Bitcoin. I'm not saying Bitcoin doesn't won't rise, because Bitcoin is just doing much more better. However, it's more volatile. But it's not the same way as you see a commodity like gold or silver. Regardless, I would say I'm holding this like some kind of Bitcoin, small Bitcoin. But when you try to understand that such commodities like gold and silver indicate where the economy is heading. And whenever you see commodities like silver and gold going high, it indicates that there's no prices going up. We don't expect to see, because the way you have been seeing it for years, that inflation is not heading back. Regardless, may say, yeah, right now, because one of the main reasons why Trump is fighting hard to lower interest rates in one or the other is be able to access low prices when he's borrowing money. But regardless, there's a cost. There's what I call an interest cost. That's likely to be almost $2 trillion in the next 10 years. That's a lot of money. That's nowhere to be joked. That's not money to be joked around. That's not something that likely to be underlooking. These are big actual numbers. These are numbers that we shouldn't be underlooking. Lowering interest rates, that means someone just looking for low borrowing costs, but it's not ready to address the US debt that's rising. That's almost ready by the end of the next year at 40 trillion. Very soon by 2027, it will be 50 trillion, if you ask me, because it's rising faster than never than before. Otherwise, thank you for watching. See you in the next one.